Hey, what's up guys? Aaron here. So FTX creditors are getting screwed in multiple ways. I'm going to cover exactly what's happening with how the assets are being valued. Not only are assets being valued at the very bottom of the bear market, but some assets are even being lowered more than that, which I think is really crazy. Also, Sam Bankman-Fried's trial has been dropped in March, which is nuts. So he's not going to be charged with unlawful campaign contributions, and also he's not going to be charged with this conspiracy to bribe Chinese officials. So that's another way that FTX creditors are kind of getting screwed right now. A lot of people want Sam to get charged with everything, especially if they lost money in FTX. So I took some snapshots from all the documents that came through about how they are valuing the crypto assets. But what I want to first start out is right here, a crazy example. So we have Bitcoin at 16,871 bucks, super low, bottom of the market. ETH is at $1,200. Sol is at $16. But get this, guys. So if you held 1,000 OMG tokens on FTX when they went bankrupt, you would be getting a claim of $1,230 because FTX is valuing OMG at $1.23 per token. But guess what, guys? The current price of OMG is 83 cents. So basically, if you held a shitcoin that went down in value since the bottom of the bear market, you are going to be made more whole on your claim than somebody that literally held higher performing assets like Bitcoin or Solana. So the date they are taking the snapshot from is November 11th at around 10 a.m. Eastern time. So they used CoinMetrics as a way of compiling and getting the best, most accurate price for these coins. The guy from CoinMetrics has a 54-page document going over exactly how he did this, which is very confusing, very overwhelming, and it's just a lot of information here. So what's interesting is that they are throwing in all these fancy math equations, but with the Celsius bankruptcy, they did none of this. They said the price of the coins, and that was it. Only Cell token was contested. Everything else was not. So a lot of people are going to be objecting to how they value these coins. A lot of people will be, in my opinion. So we have the objection deadline for January 11th, and then this will either be confirmed or denied on January 25th. So the person who did this analysis is Dr. Sabrina Howell. So she analyzed and determined whether adjustments needed to be made to those petition date prices due to the likely effect of an orderly liquidation. So the big issue right now is that there are a lot of tokens, which I'll get to in just a sec, that she lowered the price of beyond the bottom of the bear market for most of these coins because they didn't have a big market, or she tried to project what it would look like if they actually did a liquidation. She says that in an orderly liquidation, certain of these coins would have been sold at average prices below the market prices. So we'll get to this later in the video, but basically her job from FTX was to project the price of all of these coins if they liquidated everything on the day of petition. But the weird thing is they did not liquidate everything on the day of petition. So why are they trying to lower the price of these coins? It's such a weird thing that they're doing, which again, I'll touch on later in this video as well. So she talks about different discounts for coins that could not be marketable, like locked tokens. She then talks more about FTT, and she says it is seen as equity, and therefore those claims have no value. So she is calculating discounts, basically saying that these assets are worth less than they were on the actual petition day for 107 out of the 1,322 unique assets. She basically says here that there's no discounts for fiat stablecoins, futures, leveraged tokens, and tokenized stocks. So more on FTT, which does suck in my opinion for people that held FTT, and I don't think this is appropriate in my opinion, but $416 million in FTT and $310 million in FTX equity claims. She is saying that the fundamental value of these assets is zero. Now, equity, I get. Equity is something where if the business fails, you're not going to get anything. But holding FTT token, I find very interesting because there's a lot of correlations here with Cell token in Celsius. Now, they finally agreed on a 25-cent Cell token, but had this woman evaluated Cell token, my guess is she would have said it is valued at $0. Now, there are probably going to be people that say FTT should not be valued at zero. There's $416 million of claims held in FTT, so probably people are going to argue that point. She's also treating staked tokens the same as wrapped tokens, and those will just get the same discount as the underlying coin. Here she says that some assets were marked to zero if there was no reliable market to sell them. So basically, if there was just no volume and no market, she says that if they tried to liquidate, they would have gotten $0, and therefore she is giving certain coins and assets $0 worth of value, which I'll cover a little bit later. So here, 408 coins have asset liquidation discounts. But the issue, which, man, there are so many issues in this, she actually doesn't even share which coins have between 0 and 10% asset liquidation discounts. Only the coins that have over 10%. There are so many issues with this, and it's just crazy. So she would give some of these discounts because the size of the positions that FTX had was just too big, and therefore counterparties would have bought it for cheaper due to the blockchain's transparency. Or here, the debtors held more than the daily average trading volume of the asset. So therefore, if they tried to liquidate, the price of that coin would be pushed down a ton. So here we go into the actual discounts. Here are the top 5 digital assets with the highest asset liquidation discounts. So we have Serum, Maps, Oxy, Media, and Boba. And here you can see some are marked down 58%. Maps and Oxy are basically being wiped out, getting a 100% discount. There was 50 to about 80 pages of just complex math and theory to justify their prices. And I just took 2 little snapshots for you guys. And I'm thinking to myself, with BlockFi and Voyager and Celsius, they didn't have to do any of this. And it's interesting that FTX decided to do this. And I want to take a quick pause, talk about the sponsor of this video, which is Claims Market. Now, Claims Market is a marketplace where buyers will compete to give you the best price for your FTX claim. So take a look at the prices of claims right now. They are still at the highest they have ever been, between around 68 to 73% of your claim. Now, the exact price will depend on things like your jurisdiction, definitely if you have clawback exposure, what coins you held, etc. Especially now, knowing that some coins will be marked down. That will affect how much they will buy your specific claim for as well. So I'm definitely not encouraging you or telling you to sell your claim, but it is something that a lot of people have decided to do because they are just tired of being tossed around like a rag doll, where their claim all of a sudden got valued less because FTX decided that if they liquidated that asset, it would be worth less, and people are just tired of it, or they just need the money. So Claims Market is where you want to go if you have any questions about selling your claim, or you just want to inquire about the process. So I'll include the link below for you guys, and now let's get back to the video. So this is a little chart showing how they decide to adjust prices. So master pricing dataset, this is going to be the price of the token on the day of the bankruptcy petition. So everything from fiat, stablecoins, non-marketable assets, all the altcoins, equity, leveraged tokens, tokenized stocks, spot derivatives, and futures all used the price on the day of bankruptcy, which was November 11th, 2022. Some crypto tokens, non-marketable assets, and FTX equity claims and FTT went through the asset liquidation discount. Non-marketable assets like staked assets and FTT went through an additional adjustment discount for lack of marketability, like you could not sell it on the open market. And finally, FTX equity and FTT got marked down to zero. So next, she gives a couple charts. Now, this is another issue I have. These are assets with asset liquidation discounts greater than 10%. So there are a few pages of different tokens. Most of these are pretty small, not huge tokens. There are some that are recognizable, but these are not going to be like major tokens. And you can see here on the right just what size of a discount they gave to these tokens. The issue is that these are only tokens that have a discount greater than 10%. And this is what's really frustrating to me, is that they do not share all the different tokens that had a smaller percentage discount. So here they give the asset prices, right? They give all of the prices for all of the assets, all of the crypto assets. But again, we do not know what percent, if any, for these crypto tokens were marked down unless it was over 10%. And that is really, really weird and deceptive. And you would actually need to go and look yourself for each asset to see, oh, is it less than the day of bankruptcy petition or not? A lot of people are going to have a huge problem with Solana being $16. I mean, wow, that is like, I don't know, a 5 or 6x less than it is right now. A few days ago, it was like an 8x less than it is right now. So people that held Solana on FTX are getting absolutely screwed versus, again, people that held a coin like OMG, which has actually gone down since the bankruptcy petition. And I just picked OMG out of nowhere. I just found one and searched it, and it just happened to be less than what is going to be marked for your claims. So guys, that's basically it. If you are an FTX creditor, make sure to subscribe. You can tell I am cutting out all the fat in these videos, and I just want to give you exactly what you need to know. So basically, we have another week and a half or so for objections to roll in, and I expect a lot of objections to roll into this. There are so many issues that I can see with what they did here, because they didn't actually liquidate every coin on the day of the bankruptcy petition. But FTX wants to lower everybody's claim as much as legally possible, I guess. Now, why do they want customer claims to be lowered as much as possible? I don't know. There's a whole waterfall of distributions, and maybe they want more value to go to other entities, other people, not customers. And that sucks. That super sucks. So I expect a lot of objections to flow in over the next week and a half or so, because this really sucks for a lot of people. And I don't think it's fair. Now, if FTX actually liquidated everything on the day of the bankruptcy petition, which I don't believe they did, they still have a lot of crypto, maybe a coin that FTX held so much of the trading volume that there would literally be no way to sell that coin, maybe I can see marking that coin down, maybe. But they are changing basically the bankruptcy rules here. They are basically saying, we're not just going to take a snapshot, we're going to do hundreds of pages of math and justification to lower the prices of everybody's claim. Because remember, they're not increasing the price of any coin. They are only lowering the price of the coins. So guys, thanks for watching the video. Check out Claims Market if you would like to inquire about selling your claim and maybe looking at options for getting liquidity immediately. If you want to take that money, invest it into crypto, or do whatever you want with it. This process is going to take months and years to play out. Maybe people will get some money back at the end of 2024. I could see it going into 2025. We really do not know. So thanks for watching, guys. Till next time, talk with you soon, and bye for now.